Hey, what's up everyone? This is Silver Slayer. We are 600 subscribers away from doing my 42,000 subscriber giveaway. So if you guys want a chance to win some free silver soon, make sure you click that subscribe button. I'm also doing a giveaway at 45,000, 47,000, and 50,000 where I'll be doing a huge giveaway. I also post daily videos, so hitting that subscribe button is a no-brainer, especially with information coming out like we talk about on a daily basis. I mean, the stuff we go over is critical, vital to be educated on what's happening, why the prices are being affected this way, and most importantly, what you should do about it. You cannot be blindly investing in today's day and age. So I got y'all. Make sure you're subscribed. So this video is interesting. CPM Group, holy grail of information. Talk about supply, demand, the real numbers, right? All the really good stuff that a lot of people brush over. A lot of people don't take this information and do anything with it. And that's crazy to think about because silver's main price or whatever its main driver is supply and demand. It's a very fundamental type of investment, and they literally tell us the numbers. So we're going to break down the numbers today, look at what's going on with supply and demand, and also giving great insight on where silver's headed. If we can apply some supply, demand, looking at production, looking at what's going to drive silver demand in the coming future, looking all this and what's happening in the economy with the stimulus getting thrown out, the pandemic. I mean, this stuff is all what's going to show silver's price or where it's headed. Investors make strategic decisions based off information. Gamblers throw money, hope it sticks. We're investors, so let's look at this information. Let's break it down. Let's dissect it and see where silver is headed. So, the first article, silver ore grade decline reflects higher silver prices, not depletion of ore. So, they're showing that more silver is actually going to be better for silver. You would think it would be the opposite, low supply, high demand, but they're saying the opposite. And that's actually something that I was looking into more and more, because demand was up 3% this year, and rightfully so. I mean, we need more silver. Miners don't really care about silver because it's $26 an ounce. They'd rather be looking for gold that's $2,000 an ounce, right? That's going to put a lot more money in their pocket, regardless of the consequence, regardless of the fact that we need more silver as we advance technologically, and silver is used in everything. And actually, silver is more rare than gold right now. It's getting harder to find silver, especially with the pandemic restrictions. I mean, it's a mess right now. So this must be distinctly understood. The CPM is bullish on silver at this time, projecting record prices at some point over the coming decade. So they're talking about $50+ silver over the coming decade, and they're probably being very loose on that. It's probably a lot sooner, but they don't want to be a silver pumper. They don't want to mislead people, and that's what I try to do on my channel as well. I'm not going to sit here and tell you that silver is going to be $100 tomorrow, because that's unrealistic. That's going to give you false hope, and it's probably going to give you resentment and maybe even push away from silver if that year mark comes and silver is nowhere near $100. So it is working with several legitimate entities to encourage large and small investors and buyers to hold silver based on rational and accurate information. Hold it. HODL. Hold on for dear life. This week, a group that is actively promoting silver to small investors based largely on inaccurate information and decades-old discredited conspiracy theories approached CPM with a request that CPM be interviewed by them. And this is to help them better inform their audiences. So I like how they're trying to give accurate information, the correct information out there, because misinformation is a real thing, and people might read something and believe it's true. That's why I try to make my videos and go over these charts, go over reliable sources like CPM Group, the Silver Institute, Kitco, Seeking Alpha. I really don't jump too far into just random sources. I try to follow, the main ones, the ones that can be backed. So reviewing the group's postings, CPM saw buckets of misinformation and inaccurate commentary. One of the comments it focused on was the position or the supposition that the decline in average grade of ore mined at primary silver mines over the past 15 years reflects a depletion of mineable silver. That the world was running out of silver. This is a misunderstanding that is not uncommon. And this is a good point. See, most silver is thrown away. The real reason that silver is so scarce compared to gold at least, is because silver is an industrial metal. Most of it is used in gadgets, electronics, so it's getting thrown away. So yes, the gold to silver ratio is 8-1, but it's actually a lot lower than that, because all gold that gets dug up out of the ground is recycled, re-scrapped, reused, right? Silver that gets dug up out of the ground is thrown away. So the recirculating supply of gold is very high, like 99%, and the recirculating supply of silver is very small. Nobody's pawning their jewelry and getting like $1.50. No one's scrapping gold or silver out of laptops or anything to get $2.50 for an hour's work of scrapping the silver out of it. But people will do that with gold. They're gonna scrap every single gold piece of jewelry they have in their house. People actually do take time scrapping gold out of laptops because it's profitable to do so. Silver, not so much, especially since most gold is used for jewelry, coins, bars, earrings, necklaces. So of course most gold is re-scrapped. So one of the group's videos discussed how the decline in the average grade of ore at primary silver mines showed that the world is running out of silver ore. That is not accurate. The table below helps explain. One factor determining the average grade of ore being mined is the price of silver. The decline in ore grade since 2005 reflects higher silver prices, not a depletion of ore. The 184% increase in silver prices from 2005 to 2020 allowed miners to earn more by mining lower average grades of ore, which ethical miners do maximize the life of a mine or recovery in the return over the life of the mine. The mining term is to mine the average payable grade. We have to also think of something else. We have to be rational about this, right? We have to be rational about this. So Mexico and Peru, they accumulate nearly 40% of silver production. 40%. Just those two countries alone. Silver is found, it's a byproduct metal. It's a byproduct. They find it by accident. There's very few single silver mines. Very few. Most mines are looking for gold, lead, zinc. But if they find some silver on the side, they'll take it, but they're not looking for it, right? The mining term is to mine the average payable grade. So mining companies mined higher grade ores in 2005 because the price of silver was roughly 1/3 of the price in 2020. This is called high grading and is done to keep mines running at times of low prices. Many of those mines were unprofitable at the price grades of 2005. So you can see right here, average grade of ore mine declines in response to rising silver prices. So they're saying as the price rises, the ore or the amount of silver declines and vice versa, which is very interesting. So as price rose, mining companies mined lower average grades that were profitable at those higher prices. Miners today can profitably mine silver with ore grades that are a fraction of what they had to mine. Try to be profitable in 2005. I mean, if this does make sense, if you think about it, if the price of silver is lower, you have to dig up more. If the price of silver is high, you don't have to dig up as much because not as many people are buying it. But nowadays it is shifting where, speculation comes in. I have another article we're going to be talking about in my next video, talking about how, younger consumers, people in their 20s and 30s are all buying silver, and with the Reddit short squeeze, it's becoming more mainstream than ever. But anyways, it is interesting because I still think that we are going to be coming to a situation almost like the Reddit short squeeze where a U.S. mint ran out of silver eagles because you can't really predict demand, especially on that type of level. We're going to see scarcity. APMEX wouldn't even take orders. They ran out of stock. JM Bullion, Provident Metals, Modern CoinMart all sold out. We're going to see situations like the U.S. Mint having to make an emergency 1 million mint of American Eagles, the San Francisco Mint, at the end of the year because they underestimated how much silver was going to be needed. Then, moving forwards, we have the green energy revolution used in solar panels, the solar panels on a global scale, 5G towers, electric vehicles, silver lithium-ion batteries. I mean, as demand rises, we need to keep up with that, and it has risen 3%, but is that going to be enough? Especially for the last 7 years, we've cut back silver production dramatically. So it's going to be interesting to see what happens, and we have to kick up production, but if the price actually rises, they're saying we actually would be cutting back production. So it's going to be a very interesting situation. So futurists in the early 1970s thought we'd run out of silver, gold, copper, oil, and raw materials by the 1980s because they did not understand the interplay among resources, reserves, and prices. You can see from the table below that in 1981, there were only 8.1 billion ounces of silver in the world reserve base. But in 1988, there was 10.8 billion ounces. Even though 3.3 billion ounces of silver had been mined in the intervening years, since 1988, cumulative world silver mine production has totaled 21 billion ounces, yet the reserves are estimated to have risen more than 100% from 7.8 billion to 16.1 billion ounces. More silver was mined from 1988 to 2020 than existed in reserves or the reserve base in 1988, and the reserves are larger today than they were then. The world is not running out of silver. These are ore reserves. They exclude above-ground inventories in silver bars, coins, jewelry, decorative items, which are estimated to be at least 30 billion ounces. So this is probably the most misinformed, or the one situation that people I guess have trouble understanding. We're not running out. They're saying the world isn't running out of silver, but the above ground inventories are definitely shorter. It's hard to tell how much to dig out compared to how much is going to be bought. Because once you dig out the silver out of the ground, out of the Earth's crust, then you have to make it into bars, coins, jewelry, decorative items, all this. But you have to still have an idea of how much or what the demand is going to be in millions of ounces. Then you have ETF side of it. The SLV had a 1.8 or 1.2 billion ounces contracts. That's insane. So it's a very tricky situation because there's so many different principles going into it. And I think it's going to be even more tricky moving forwards, especially moving forwards as demand is going to be largely rising, rapidly rising over the next 5-10 years. Right? They said zero emissions by 2025, 2030, and that's on a global scale. That's not just the United States. Joe Biden's throwing out trillions for this project, but this is on a global scale. China, all these countries are hopping on board, so it's not just like silver demand is going to be coming from one side of the world. It's going to be global. So what is that going to do to silver demand? What are miners going to do? It's going to be interesting. It's going to be hard because not only are individual investors like you and I going to be buying silver, trying to get a slice of the silver pie, but big business is as well. Going to be interesting. Gold and silver supply side impact on prices. And this is why I love precious metals, right? Supply and demand. One of the most fundamental investments you can find. Gold and silver analysts tend to typically focus on demand drivers such as monetary, fiscal policy, as with their correlation with the U.S. dollar, right? We know this: dollar index high, gold and silver low, vice versa. For example, the past 12 months, it has been widely assumed that balance sheet expansion by the Federal Reserve and other central banks probably contributed to the rise in gold and silver prices. So QE, which is quantitative easing, and that's throwing out a whole bunch of money that we don't have, reprinting the dollars, weakening the dollar, probably contributed to the rise in gold and silver. So you can see here's a Fed balance sheet, silver. So while demand factors are undeniably important, one should not overlook supply as a driver of precious metals prices. Gold and silver mining production has been on the decline since 2016, right? Since 2016, production has been on the decline. Right? Gold and silver mining production has been on the decline since 2016. For the last 7 years, and I talk about this on my videos, for the last 7 years, we've been cutting back production by the hundreds of millions of ounces. And when I say 7 years, I meant literal. This report says it right here. Right? When I say something, I'm not just making up a number. So that means we're technically 7 years in the hole, because to even break even, we would have to catch up from the hundreds of millions of ounces that we've lacked or that we've cut back from, especially as demand is set in stone this year with the green energy revolution. So that's why, like, an article like this is going to make things extra tricky, if you see where I'm going. So gold and silver mining supply has varied over time. Mining supply for both metals stagnated or fell during the 1970s, a period of soaring prices, right? Think about it. 1980, we saw $50 silver. Gold mining supply more than doubled between 1980 and 1998, a period where prices fell sharply for both metals. Silver mining supply rose during this period, but not to the same extent. During this 18-year period, gold prices fell from $835 an ounce, as low as $280. Silver prices suffered an even larger percentage, from $50 to low as $4. And that's where they're going to be kicking up production. When prices are low, kick up production. When prices are high, they kick down production. You would think it would be the opposite. So you can see silver mining production worldwide, right? Mexico, Peru, China accumulate most of it. Nearly those two countries alone accumulate 40%. Gold mining supply began in 1998, didn't hit bottom until 2009. Then 1999, 2011, gold prices soared. That's also when we saw $50 silver, yada, yada, yada. So and this is interesting right here, economists are unable to conduct controlled experiments in this. It is difficult to disentangle the influence of supply on precious metals from that of macroeconomic conditions. And that's what I was kind of talking about. It's hard to determine how much silver is going to be bought this year. And another great way to look at it, or to tell, is the mintage numbers of American Eagles every year. Right? Pandas almost always minted 8 million per year. So 8 million Chinese pandas each year are minted. So you have like the 2020 pandas minted to 8 million in 2020, 2021, 8 million. Kookaburra, same thing. It's 300, 500,000 per year. And it's always been that, except when you get to like the 90s, obviously it was a lot lower. But then you have American Eagles. It started off, it used to be like 20 million per year, maybe, I think even 30 million, but it was like 20 million, 15 million. And then all of a sudden last year, it was like 11, cut back dramatically, right? It's going opposite. Earlier, there was more, tens of millions. And with pandas back then, several 100,000. Now pandas are 8 million. And American Eagles are near the same mintage as pandas. And it's interesting to try to gauge, and that's why the U.S. Mint ran out, was because there was only a mintage like 11 million, and that far exceeded the demand for that year, or this year too. So especially this year with the silver shortage and the pandemic and people looking towards safe haven metals. So anyway, this is a pretty large article. So let's go over the bottom line. Mining output is a significant driver of changes in gold and silver prices. Gold mining output appears to have major influence on both gold and silver prices. Silver mining output appears to have somewhat weaker influence on gold and silver prices. And when precious metals prices rise, jewelry buyers get price out of gold but can often still afford silver. So gold and silver are economically connected via the jewelry and investment markets. Higher economic value makes the gold dominant member of the gold-silver system. Secondary supply production response to price rather than drives it. So interesting stuff, right? I hope that this article shed a lot of light, shed a lot of transparency, and a lot of misinformation, because when it comes to this, it can be confusing. It definitely can be confusing because you're looking at so many different sources, so many different players in the game, all throwing data out, and it can there's a lot of gray area, there's a lot of loose area, and especially with the pandemic now. So yeah, hopefully this video helped. If you thought this video was educational, informational, at least entertaining, make sure to smash the like button. I post daily videos every single day. Also make sure you subscribe because I'm doing tons of silver giveaways. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.